A DA MP, Member of Parliament, Phumzile van Dam, has announced her resignation from the DA as Member of Parliament. We are trying to reach her to get more comment from her and, of course, the reasons behind her resignations. Now, for more details on the MPC decision and, of course, the budget that was tabled earlier on by Treasury, we are joined now by Arthur Kamp, who's Chief Economist at Sanlam Investments. A very good evening to you, and thank you so much for joining us, Mr. Kamp. So, first of all, let's just start with this. There's been an uptick in recent inflation numbers, as my colleague Tsepo was mentioning, but the Reserve Bank governor said we shouldn't be concerned about this. What are your thoughts on this?
Good evening. I would agree with that. The core inflation rate's only running at 3%. It does seem like it's reasonable to expect quite a bit of the inflation pressure that is there transitory. And the long-term inflation expectations still seem quite well anchored, and the medium-term inflation forecasts are also still quite well anchored around the midpoint of the inflation target range. So plenty spare capacity in the economy. I think it's still time for the SARB to bide its time and wait.
Okay. Ndivhuho Netshitenzhe also joins us. Just share your views about this, the reasons that were outlined by the MPC.
Yes, so I completely agree with Arthur. Inflation, although it is trending higher, we believe that it's quite transitory, so it will trend down by the end of the year. We only expect inflation to be at around 4.3%, as you see the base effects of coming out of the inflation numbers towards the end of the year.
Okay. Now, I want to talk about the MPC decision just with regards to their trajectory, okay? So they've been saying that cyclically, there is an impression that trajectory is calling for a different policy stance, fiscal stance. Is there a convergence between what we've seen, the MPC decision, and what we've seen with the budget statement that was tabled earlier on? Arthur, let me start with you.
Yes, I think there is. So at this point, it seems like the South African economy is under pressure because for many years what we've been doing is we've been spending on consumption and piling up quite a lot of government debt doing that. And we've let capex lag. And so what's happened in the past year with this high level of dis-saving, and a lot of it obviously because of COVID-19, but last year the private sector had to save to help fund government and has been having to do so for years. In that environment, if you don't attract enough foreign capital, then all the private sector is doing is saving more to fund government, and it's not investing. So this is, I think, why Treasury is in part looking for fiscal consolidation to reduce the level of borrowing, to also free up some space for the private sector to invest in this environment.
And Ndivhuho, your thoughts, the fiscal framework that was tabled earlier on. I mean, we know that there's been a lot of talk of economic restructuring, especially amid COVID-19 and building a post-COVID-19 agenda. But some of these things are external. So the management of it from the monetary policy side, is there again convergence? Is there a sign that we are walking the same tightrope?
Well, in terms of the fiscal consolidation and the idea by government to try and limit the rise in debt, I think the budget earlier this year showed a clear intention to do so, specifically with the plan on reducing the wage bill. In terms of monetary policy, what I think the Reserve Bank has given, I guess, the South African economy is a chance to get that demand going by allowing people to be able to lend more at a cheaper rate, so that demand increases, spending increases, and therefore we'll see the economy starting to really get going again. So allowing government to consolidate the fiscal expenditure increases confidence within the economy from both your businesses and your consumers. And the Reserve Bank's sort of historically low interest rates allows for demand to get going once we've seen vaccination and the rollout of vaccination get a little bit more robust. Then you can see demand increasing, and with the lower interest rates, that is really going to boost the demand by consumers.
And Arthur, I mean, some of the ministers that have been tabling their budgets, we're going to speak to the Trade and Industry Minister in just a moment, or at least in about 30 minutes or so. They are talking about progress on economic reforms, etc. But I want to look at the medium-term spending plans and job creation. Against this current environment, does it seem like they'll be able to meet some of those objections? I know there's Operation Vulindlela, for instance, and there's been 83.2 billion rand that has been cumulatively made available for public employment programs. But many have lamented that it's really not making a dent, especially given this environment, unpredictable environment of COVID-19.
Oh, absolutely, it is very difficult. So we are 1.4 million jobs still down from pre-pandemic levels. These programs can only do so much. At the end of the day, the broader economy and private sector investment is going to be required to be able to bring that unemployment rate down. South Africa is going to have to grow 4 or 5% plus for quite a few years to start making a meaningful dent in that unemployment rate. So certainly that would be the key here, is to create the space for the private sector to invest. But of course, importantly in this environment would be a partnership between government and the private sector, particularly on a lot of these infrastructure projects, which will also make a huge contribution towards creating the type of environment where that can take place. So one would hopefully see a social compact being formed, in fact, and around this to get investment going. It is the most important thing right now. It has to be broad-based across the economy, must include the private sector to make a dent.
Ndivhuho, the rand strength, some are saying that we must take caution, it's transitory, but also the Reserve Bank's own trajectory model indicates that we should be entering a rate hiking cycle. But when would be the right time of that?
I think in terms of rate hiking, the cycle we expect it to start around mid-2022. I think once the MPC sees that the economy is getting going again, and to prevent it from overheating, where we see inflation then decouple from the expectation that it will remain around its midpoint, then the MPC will need to start acting to prevent an overheating and overshooting of inflation above not just the midpoint, but the 6% target or limit, So I think mid-2022 would be a perfect time. And this all also very much depends on how successful the rollout of the vaccine is. So once you get the vaccine rolled out more successfully and more robustly, then you'll see demand pick up more, and you will then see inflation coming from sort of the demand side, then starting to push to sort of pull it up and pull inflation up on a more sustainable level. So I think the MPC is sort of got it right in terms of keeping interest rates low and keeping them low, watching out what's going to happen in terms of the demand side of the economy. But also, very importantly, they need to have a look at what's happening externally. So is the US Fed also starting to hike rates given the trajectory of their inflation? And once that happens, to prevent any weakening or large weakening of the rand, they would then have to maybe act to prevent such an occurrence, especially since our real interest rates are currently negative.
All right, thank you to you both. Economist at Sanlam Investments, Arthur Kamp and Ndivhuho Netshitenzhe. We're going to take a quick break, and Ndivhuho will be back with your sports news in just a moment.